Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yes, we got some relatively dovish news from the Fed. They are not considering 75 basis point rate hikes. Obviously that is the main thing, and also they are obviously seeing that the economy is maybe not too great. So yeah, all of that was digested pretty bullishly by the market. Also, Jerome Powell said words to the effect of they were targeting between 2.5% and 3%. Which is clearly where the markets are at or just beyond already pricing in. So obviously that kind of ruled out any risk to the upside in yields for the time being anyway. So yeah, obviously we can see by the price action, the ticker action, that it was seen to be quite bullish. As we can see, for Bitcoin, managed to break us above this resistance. So we are now trading above that. Obviously that hopefully will turn old resistance, will turn into new support, and we can at least accelerate up to test into our towards $42,000 level. Maybe we get rejected there, maybe we put in a lower high relative to this high here, relative to these highs, and we do come back down. But first and foremost, as long as we are above this support, we do have obviously a good chance of getting up to here, and then just seeing how price action decides to play out. Maybe, just maybe, we come up to here and then we come back down into test the support and this upward sloping trend line, and then we then we hopefully bounce and then break on upwards above 42. Maybe that happens. Obviously the flip side is we could then come back down, take it out, and then then obviously trade into the mid 30s. But yeah, it's an important trading day today and tomorrow into Friday's close to see how this will all be digested over the weekend, how people will look at the chart, because obviously remember, price action is king. So obviously people will want to be looking at the price action into the Friday's close over the weekend. In the context of what Jerome Powell has said. Here we go with the stock market also. Right up to that $43,000 resistance, currently obviously flirting with that at the moment. Need to obviously get supported by the support. I mean, we are quite close to it. Maybe we do dip down a little bit of the obviously the range of this candle. Maybe we dip down a bit lower and then obviously get picked back up, but ideally we get supported here and then make our way on upwards. But yeah, it'd be important to see how we trade today. This is obviously a very decent initial move, and yeah, I mean, once we get into this area and towards 44, towards the next resistance area, we will potentially be looking a lot better than we have been. But looking obviously like we can take out 44, and if we do, then we may be in the relative clear. Obviously if we don't, very clear looking head and shoulders. So yeah, this will be a pretty decisive inflection point. We can see the dollar easing off a tad here, nothing major. Could this be a medium term high we've put in here? And then can we start making our way down to this support and then potentially even this support? We'll have to see what happens. The 10-year holding up there though, so the 10-year not doing a lot in the face of this. And then just a quick look at the ruble, just for the sake of it. Look at it go, look at the ruble go. Gold had a little bit of a bounce here also, obviously off the back of a slightly more dovish Fed getting supported. Obviously did ultimately get supported in our major support zone, where I think will define the basically lower range for gold going forwards. I think we will struggle to get below 1840, but we shall see. Ethereum USD pairing back above its resistance also, similar to Bitcoin. Gotta get basically, 3,000 psychological is a psychological level, but yeah, more around 3,050. and then it can start to look better. Then yeah, I mean, it starts to look better. Obviously above here we'll be targeting the top of the channel, potentially even around 4k Ethereum. If we are to play out the bullish scenario, what else do we want to look at? I mean, just talking about Jerome Powell. Obviously we all know the rate of change is one of the most important things, the second derivative. If you consider everything in economics is moving. It's always moving. It's always a moving target. So if you assume everything's moving, then obviously the rate of change of that movement is most important. So for example, as an analogy, say you're a car and you're moving at a certain speed. Obviously we assume everything's moving, i.e. the acceleration deceleration is movement. It's not moving at a constant. It doesn't stay at a constant speed. Obviously if a car stayed at a constant speed at a given point in the future, it would be very easy to work out where it would be, and obviously we know that doesn't translate to financial markets, because it's not easy to work out where we're going to be. So that second derivative is acceleration and deceleration. So you need to know whether the car is accelerating or decelerating, its actual speed at a given time, to basically predict where it will be at a future time is only one factor. The more important one is the acceleration or deceleration. So obviously that is the rate of change. So if a car is going say 50 miles an hour but it's accelerating, it will be much further forwards in a given amount of time than it would be if it was decelerating. So yeah, that is something that you need to consider. And why I'm talking about this is because we're pretty much getting a deceleration in what the Fed is kind of projecting these rate rises to be. Obviously the market was looking at potential 75 basis point. Now that is off the table. We're down to 50 for the next few rate hikes, and obviously that is a rate of change downwards. Obviously previously we have only been up and up, predicting more and more rate hikes, larger and larger rate hikes, and now we are basically seem to be decelerating from those rate hike predictions. So if that is to continue, which it may do, then which in my opinion it will do, these rate hikes, which basically is kind of said the next 3 ones are going to be 50 basis points. I wouldn't be surprised if the next 3 ones are not 50 basis points and the cumulative amount of them is lower. So yeah, that is clearly basically a pivot from the Fed, a change in the second derivative, and potentially very bullish for risk assets, and ultimately they may be realizing that increasing that obviously a lot of the inflation is to do with supply, obviously conflicts, all that cool stuff, which isn't necessarily impacted by rate hikes. Rate hikes only really impacts the demand side of it, and it is apparent, especially with the GDP figures, that demand side is waning anyway. Therefore, the inflation aspect driven by demand will also be waning. Obviously we can obviously base effects as well, which you all know about as well. So we should get better prints going forward. Maybe we get another month or two of just of higher amounts, but ultimately the rate of change, obviously those increases, the second derivative of those increases, if it is to continue to increase, will also reverse, and yeah, things can start to look a bit more benign on the inflation front, which is what we are after, for the Fed to then ease off, and then risk assets, our precious risk assets and financial system, just to continue on with to the left and to the right and up, like we all want to see. So yeah, we'll have a look at stochastics now, see how they are doing, see how they are being impacted by this. Obviously 4 hour pretty elevated here. We've had an aggressive move, and this is a shorter time frame one, or shorter time frame for me anyway. 4 hour, 10 hour looking very strong here, very aggressive to the upside in the bullish zone. 12 hour similarly pointing up nicely, getting towards that bullish zone. Daily turned up, obviously got all the room to run here. Buy daily turned back up, got all the field to run into. 3-day still pointing down, but obviously easing off and getting very low. 5-day still pointing down, and weekly still pointing down. Bi-weekly well, looking to try and turn back up. So overall, the stochastic read does look like it can at least get us into testing this resistance. As to whether we break through or not, that is a whole nother story. But yeah, as long as we don't lose this support, it is very likely that we will test into this resistance, and then yeah, we'll just have to see what happens there. But obviously, important day for stocks. They need to realistically, we just need to close this week in this area. We don't necessarily have to get above it, but if we close this week above 4,300 in the S&P, anywhere in this zone, 4,300 and something, it will not look too bad for people looking at this over the weekend. If we do basically drop below and we're trading down here, it will look like a bit of a failed bounce, and yeah, it would look more likely that we're then ultimately going to take out this support after giving our best effort to try and get away from it. It would look, if we come back down towards it, very likely we take it out and we go towards that $4,000 S&P. So yeah, there we go, guys. Remember, this is not financial advice. I am not a financial advisor. Always do your own research, and I shall speak to you guys soon.